Good evening, everybody. I think we'll spend a little bit of time on trend analysis, or why the combination of candlestick signals uh, make it very easy or much more clear as to when a trend is reversing and when a trend is staying in progress. As we can see on the Dow, I mean, this is kind of where you put everything into the term observe the obvious. The obvious was that we were in an uptrend, and every time they came back to the bottom of this uptrend, they would take it down, and the bulls would bring it right back up into the area of the T line and above the 20. But more importantly, you can see there's kind of a trend channel up here. So Friday, they took it down a little bit more, brought it back up right on the T line, made it very simple today. If they opened positive today, they were coming back up above the T-line, which meant they were back in the middle of this channel, which meant we were going to have a few days to the upside to get to the top of the trend channel. More so in the S&P 500. Let's make this chart where we can see it. Same scenario, uptrending channel. Every time they took it down, they started bringing it right back up. So the fact that they took it up today was not unusual or not unexpected, because there hadn't been any change of this uptrend. The transportation index was more compelling over the past few days, where they couldn't get this to even hardly close below the T-line. Now they've broken out into new territory. I don't know what this line is, but we'll get rid of it. So the uptrending channel is still in progress, which the question is, well, how far will it go, or how long will it be? We don't have to know that in particular. We just have to know that any of our long positions right now are probably still got upside potential, because there's not any drastic change of investor sentiment in the market. Let's see. NASDAQ opened lower, when was it, last Thursday, and immediately started bringing it up. They didn't want to get away from the T-line. Didn't want to get out of this trend channel. So that makes it easier to kind of assess what should I do with my my positions. So it also makes it easier to hold on to the long positions that look a little bit doubtful from time to time. And so the question is, well, shoot, there's been times where we're in a nice, happy uptrend, and bam, bam, they take our positions down, trading below the T-line, and then they take it back up, and then bam, bam, they take it down. Well, that's what they were doing. So after a little bit, you kind of start saying, all right, if they're taking it down hard, I better just give it a little bit more time to see if they're going to come out of this trend channel. So that gets rid of kind of the whipsaw reaction where, and I'm not saying that I didn't do this, which I did. I closed out quite a few positions, but then I'd buy them right back again, close out positions, and then buy them back again. So again, that same scenario, that if I have a position that was going up 10 points and I only got 8 of it, that's fine with me. At least I kept myself in a position, or got out of a position when it didn't look good, got back in when it looked good. At least I know that my probabilities were that I was going to make money on that position. Okay, let's see what else we have. Crude oil finally hit, no, it didn't hold the 50. We're still in a downtrend. Crude oil, if it opens lower tomorrow, bearish doji sandwich. Let me make this chart a little bit smaller, which means this area doesn't hold anymore. They could take it all the way back down to the 200. Now, does that do anything affecting the total market? Not necessarily, but what it does affect is probably some of the oil or energy stocks. Gold took a big whack today, which knocked some of the steam out of some of the gold stocks, but here was one that had opened lower, sand, which we recommended not too many days ago. But notice what it did after they opened it. They were still buying this. So that the fact that the fact that it was down, we have a whole different perspective of what was going on in that trade, even though it was trading lower. It was actually trading up from where they opened it. And AEM, same scenario. They opened this right on the T-line, and they brought it right back up. It was down on the day, but as we can see, there wasn't any change of investor sentiment in this uptrend. So this is the type of thing where just those little, nuances, or those little visual analysis pieces allow us to stay in positions that might have looked doubtful to other people, that this looks like it's heading down right now. Probably on a bar chart. I could probably do that. On a bar chart, you can't tell a whole heck of a lot. It might be heading that, if you looked at a bar chart, that might tell you they're starting to head down, whereas on our candlestick chart, this tells us that they're still buying every time it opens lower, and they take it right back up again. Hold on to your individual stocks. We'll get to them all, maybe. Let's see, what else we want to take a look at? Interest rates. Interest rates still staying relatively stable. Not going to affect the market. Silver also got a big whack today. And take a gander at soybeans. Soybeans tried to come up today, not doing too much of anything, and the meats just kind of waffling around today. Let's see. Lean hogs. Lean hogs still looks good. It looks like it double bottomed here, bounced up. That would probably be the most one, or the most lucrative one to go after right now, because I think even live cattle is kind of in an indecisive state down here, but still has to be considered in a downtrend. What else do I usually look at? The dollar. Dollar, just nothing there. Sideways. Euro, trying to bottom out, but I wouldn't really go after this one with great enthusiasm until they got back up above the 50. And the Japanese yen, still absolutely nothing there. That's just such a sideways chart. Wouldn't even want to touch it. So if you're going out of town for a week or two, would you check weekly or monthly charts to decide what to keep while away? No. I would still, if I was looking at something, let's say you were fortunate enough to still be sitting in PES, and you're going to be gone for 2 weeks. Well, what's the analysis? The analysis is staying above the T-line. At this point, where wouldn't you want this to be trading? Right now, I'd probably put a stop right here at 1750 if I was going to be out of town. That if it came back down through that level, it shouldn't. If this is an uptrend, it should stay in that direction. What was the other one? Was it CDE? No, can't even remember. I closed it out and can't remember what it was. I'll get buy a laptop. CPE. There we go. Whoops. No, that wasn't it. Well, maybe it was it. CPE. Yeah, that was the Steady Eddie, where same scenario. If you were going out of town, it shouldn't close or trade back below this level. If it's in an uptrend, well, it did the other day, so it would have stopped it out, which we did. Would that mean it could turn right around and head back up while you're out of town? Yes, but At least your money's sitting there, and you'll have control of what to do with it once you get back. All right, let's take let's see, I did gold, silver, dollar. Okay. All right. Again, going back to the fact that we are still in just nice, steady uptrend in the markets. You want to find the sound is dying. Maybe microphone is dying. Why is that? Is the microphone good? All right. Okay. All right. Maybe I was moving my mic away. All right. Let's see. CPE. Is this considered a steady eddy? Yes, I would consider this a steady eddy. Now, if I had stopped out and I'm still watching it, or I'm not on vacation and I'm still watching, yeah, my scenario would be if it comes back up above the T-line, I can buy it back. All right. Now what was I doing? Okay, let's take a look at a few that are still acting well. The other day I bought some AMX. Because it was breaking out big time. And it's still moving up nicely. Whoops. First of all, this is kind of the telltale sign right here. Is when we do a doji gap up, that alone tells you there's some force there. Notice where they did it. Number one, they did it through the 200, and number two, they did it through this level. That's a whole new message. That knowing what this information is, a doji with a gap up. Let's make this even bigger so I can see it. Notice they couldn't get it below the T-line. When they gapped that up through a resistance level, that tells me there's still lots of power there. So still owning this one. And we'll own it until we see a sell signal. Let's see. Our long-term hold had information today. I guess they're buying out another company, which makes them the biggest drillers up there in the Balkan field up there in North Dakota. There's your classic, right now, fry pan, J-hook. Notice what your next wave is doing. Kicker signal. Where's it going to go? Look at that trend channel right there. It's going to go up. It's going to go up to the top of this trend channel and do a 45-degree off of there. So that one you stay long. What else do we got? Let's see. We did PES. That was in a steady eddy. Royal. This still implies a 45-degree coming off of here. First of all, you have kicker signal. Then you have a big breakout move. Strong price move. Look for a 45-degree. Just kind of hang on to this as long as it doesn't close back below the T-line. Tesla. Tesla's starting to come back up. So this is again where you observe the obvious. The obvious is taking up, pulling it back, taking it up, pulling it back. Now they're back up above the T-line. Where's the next prospective target? Draw that line right through that level. You could move all the way up into this area. And, Ecom. Ecom, this is where you kind of get yourself prepared. Ecom has a nice looking chart. Once again, up, consolidate right here at the 50, T-line crunch up through, back to the 50. Simple analysis. If they reach a support or a resistance level, they'll come back and act or test it to see if it's going to act as support. In this case, that was an easy observation, but they weren't going to close below the 50, and they gapped it up through there. They not only gapped it up off the 50, but back up through the T-line. This one you still want to be buying probably relatively aggressively on a positive open tomorrow, because that's the next target is the top of this trend channel, which could give you a good, fast move. The ticker before Royal, I don't know. Was it Whiting Oil? Long-term pick? And let's see. So on Ecom, this is kind of observe the potential. The potential is you got a doji sitting right here on the 50 after kind of a gap up off the 50, or I'm sorry, right here on the T line, a gap up off potential buy signals back in there. This one you want to be buying on positive trading tomorrow instantly. Same thing with AMKR. There's that doji sandwich, just obvious that this is the time to be buying. And where is it going to move back to? Probably could move up fairly fast to get back into this trend trajectory. And XON, also the same scenario, is that we're back above the T line. We're in a little scoop type pattern. This one you want to be buying if it starts trading positive from here. Because if they start trading positive, especially off that big reversal signal, making a scoop pattern, where's your next target? You know, the same magnitude move probably as this right here. And PBR was one that kept coming up in the chat room today with that slow curve gap up right here at the resistance level. Why is that? This is where we want to be buying on positive trading. That would take us up into the next territory. Let's see. I didn't look at this one today. And it's given a lot back. So this is the type where something big happened here. I forget what the announcement was. The profit taking is going on. But this is where you get ready to buy it right back again if as soon as the profit taking is over. I think that was somewhat the same reasoning we had for getting into Royal. Seeing if that J-hook pattern was starting to set up. And there was another one that, let's see, CNIT got sluggish today, but it came back up after testing the T-line. You still want to be ready to buy this one. I would anticipate at least a 45 degree, and more beneficial would be a J-hook type pattern that takes this up pretty strong. And the reason we want to stay in stocks that have good chart patterns is so that if something big does happen, or that this is the implication that something could be happening, that you're participating. If you were buying Kendai right in here after the morning or the doji type sandwich back up through the T line, there was no reason to be selling this. Might have been looking sluggish, but there was no reason to be selling this. They were somewhere in here was buying. You mentioned 45 degree. Are there other angles you use for information? Well, I use 45 degree to just kind of say a steady uptrend from here. It doesn't necessarily have to be 45 degree, but it's usually an uptrend. When you say buy on positive trading, would you set a buy stop tonight for tomorrow, or do you worry that it might go up for a few minutes and then plunge? It all depends on what your trading schedule is, Jay. If I'm sitting here and I'm seeing things that I'm going to be buying on positive trading tomorrow, then I'm going to be seeing if they're positive trading. Too late on Kendai? Yes, too late on Kendai. This is the area that you're looking for. Well, maybe not. Maybe this was the fry pan bottom breakout. If you're buying this, at this point, use the halfway point of this candle as your stop. You shouldn't come back below there because this was the candle that told you they were breaking out of the fry pan bottom. Maybe short Kendai? No, not until you see a sell signal. This is what we expect coming out of a fry pan bottom is a good strong breakout. Just because a stock is up doesn't necessarily mean you get ready to short it. Because for all we know, it could come up and go flat for 2 years. Wouldn't go flat for 2 years. But there are better things to be shorting. Those are stocks that are showing weakness and sell signals. A few more that we follow. ITMN. That's a nice little scoop pattern bouncing off the 50-day moving average. Where's the prospective target from here? Well, if they break through this little handle, I would suspect you look at the trend and look for it to come up into the 5750 area. There was another one right almost like that. It was AMBA. Uh-oh. S.AMBA. No, AMBA was more of a J-hook pattern setup. But AMBA is still a good, let's see, there was something. AMBA is a good setup. Oh, I think I was trying to equate that to ECOM. If these open positive, they're perfect J-hook type pattern setups that you can get into instantly, and you know where your stop is. You shouldn't close back below the T-line. Let's make this big enough where we can see it. So that's ECOM and AMBA, both good setup trades. Lots of J-hooks out there right now. Facebook, nice J-hook pattern setup. FMI, nice J-hook pattern setup. When you see these J-hooks, especially in an uptrend, that means there's going to be more upside. I don't know, is anybody else having problems with my sound? Maybe I'm just the one cutting out. MDXG, another J-hook pattern. There's your fry pan bottom. This is your classic. Wouldn't be afraid to be buying this one. Yeah, sometimes if you just log out real quick and log right back in, you get a better connection. And, oh, before I forget, I'm supposed to still mention, anybody interested in coming to the private training sessions at the lake, get with me as soon as possible, because Pat's going to, I think we've only got 2 spots left. Pat and myself would we'd rather have members doing it because of obviously they're going to be more interested. I've had a few people that were not members that came to these sessions. Then you never hear from them again. Not a whole bunch, but usually we save the spots or fill the spots with non-members in times when the members don't take all the spots. So anyways, if you have any inkling to try it, or you still need more information, send me your email, or email me your phone number, and I can go through what all is involved. What am I looking at? Let's see, TOWR. Another J-hook pattern that you want to definitely take a look at tomorrow. Now, here's the one I'm going to go after aggressively, and you'll probably see this on our recommended. But VJet, this is your classic. Fry pan bottom, exuberance, J-hook pattern setup. I'll be buying this one on positive trading. Especially if this opens positive tomorrow. KEYW, there's your classic also. Your fry pan bottom, your J-hook, be ready to buy this. Obviously, your first target is right up here to the 200-day moving average. David L. pointed out eGov today. It had a big, strong run. It probably has more upside. Now, this is the type, with that type of move, where you'll see the 45 degree. And so whoever asked the question, the 45 degree is something like this, or something like this, or something like this. It doesn't have to be exact. It just becomes a steady uptrend after that. Do you plan to buy options on VJet or stock? Both. Yes, both. And this one is probably going to be going on the recommended list tomorrow. BIOF, that's a nice looking chart. Your downtrend, your bullish signal. If this opens positive tomorrow, be buying, anticipating wave 3, probably taking us right back up to where they have tested it a couple times. And EOX, there's that kind of a double J-hook pattern, but the reason this one's so strong, make this a little bit bigger because I hate to think how colorblind I really am because stop signs are getting a little bit hard to see anymore. There's that kicker signal. This one I wouldn't be afraid to be buying on the basis that wave 3 could be this magnitude right here. And what is that? Oh, DXM. DXM. That's not what I want. S.GXM. This one has that little trend kicker, and we're right here at the resistance level. If this opens positive, another one. So this is kind of fits into this kind of convergence definition that we've been working on here recently, that if you can identify as many elements of why the buying is there and when the buying should occur or where you should be entering, the more pieces of evidence, the more convergence of all the evidence that we need, the higher the probability you're going to be in the right trade at the right time. So if we're seeing a double bottom, we're seeing a wave 2, we're seeing a doji or a trend kicker, seeing stochastics turning up, we're right at a breakout point. Yeah, if it opens positive, that's telling us that's all the reasons why we want to be buying something like that. That was DXM. IG. On VJet, no, I would just probably be buying the calls, mainly because the upside potential on VJet is so strong that there really isn't a target at this point. Could you say a little bit how you choose BF over, say, ITM or, okay, let me see if we can do that. What did I just do? IG also, observe the obvious. Kind of a strong kicker, not quite a kicker signal, but here was the signal, the doji bullish engulfing afterwards, and now you're in the breakout area. This one should have some more upside to it. Okay, BIOF, because it's right here, right now, on the breakout area. And where's our upside target? Where everybody else has traded it, or people have traded it before, which would take you up here to the let's say the 950 area. So if you're moving from 680 to 950, I can figure this out, 680 to 950, 680, that's about a 50% move. There's nothing wrong with these other ones. ITMN, nothing wrong with this, except it's a little bit bigger, what do I want to say, a little bit more, say a little bit more solid type stock, but its upside potential up here is maybe 20%. And what was the other one? FMI. Oops. And this one, if it moved up, let's say up to even here, you got maybe a 30, 35% upside potential. So the reason that this one intrigues me so much is if it moves from this level back up to this level, that's basically a 50% return on your investment. Bull put credit spread. You can a bull put credit spread. You can and I didn't even look at that on VJet. Now I did look at it on Apple for a credit spread. And why do we do a credit spread right now? Because we're only 1 week away from expiration. And so what do we see in Apple as far as our analysis? We see that we're in an uptrend. All right, so when we looked at the selling the puts, there wasn't a whole lot of money in them because what's been happening to the stock over the last 3 weeks? It's been moving up, so the puts aren't getting any real big premium in them. So there wasn't a whole lot of money to be made. Now, on the other hand, the reason we went after the spreads on the credit spread on Amazon is I can't remember the numbers. If we bought or if we sold the 345 put, I got to remember the numbers, and we bought so we sold the 345 put and bought the 335 put. So you had 10 points as your risk range. But that early in the morning would have produced a $3.15 that you put in your pocket. And if it expired above $3.45, I'm sorry, $345, then you kept that $3.15 in your pocket. Meant your downside risk for breaking even was $3.15 below $3.45. But which way were we anticipating this stock to be heading over the next few days? Well, we had a gap up through the resistance level, and today it wasn't even staying below the 200. So first, when I looked at it and mentioned it in the options room, it was 315 on the 345, 335. Then, even if you moved it up to the 350 to 340, it was still $2.86 that you'd be putting in your pocket. And again, the probabilities with that 10% or 10-point down move, that's just for your protection. That's so that if all of a sudden Amazon announced they were going out of business and it dropped 100 points, you were protected. You only had by being maximum you could lose is $10 minus the $3.15 that you put in your pocket. So your maximum downside was for a yes. Where is the options room? The options room, Cliff, is you email Abraham at candlestickforum.com. Yes, wait for the special. We're working on something for a special for members to be in both rooms if they want to. Now, I always forewarn people, the options room, there's only about 25, 30 people in there, but it's much more conversation of the different, what do I say, not different strategies or the different trades. And the reason we did that was so that you wouldn't be people sitting in the regular chat room learning about candlesticks, having it all mixed up with option trading lingo in there. So it's just a separate room so that more option trading strategies can be discussed with candlesticks, obviously. So anyways, the reason we went after Amazon is because the premiums weren't out of the puts. There was as many put buyers as there were call buyers in this time frame. So that meant when we were selling those puts and putting that money in our pocket, that's because it also had premiums built into them as well as the intrinsic value. And as the price goes up, obviously the intrinsic value goes down on the puts, and the premium, the enthusiasm area, or the enthusiasm amount of the price of the option goes down. So right now, as long as this stock stays above 345, we're going to make 315 on the one set of puts, and as long as it stays above 350, we're going to make $2.86 on the second set of the credit spread. So the reason I was showing this is you still have to do the math. And a stock like Apple, which before we had made very good money on that credit spread. Uh-oh. What do you mean? Apple not found. About a month ago, or maybe it was 2 months ago. It was a month ago. We started doing the credit spread, which we were putting, I think, $2.15 in our pocket because the stock was starting to go up and there was only 3 or 4 more days to expiration. And then they popped it like this, so that immediately took all that money, or those options, down to zero, so we kept that money. What indicates that a put spread is worth buying? Is there a certain dollar amount to credit? No, not necessarily. We're looking for something that if we're going to put on the trade, it makes it worthwhile. If you're going to put on a credit spread and you're only going to make 60 cents on your trade, and your risk factor would be $10 to the downside, that might not be worth it. But if you're going to make $2 or $2.50 or $3, and your downside risk factor is 10, that $2 or $3 is worth it. Now, does that mean your downside risk is to make $2 or $3 or $2.80, $3.15, and the possibility of losing $10? Is that worthwhile? Well, it's not the fact that it could go down $10. The analysis is the probabilities are right now that this stock is going up, and our protection is that if it all of a sudden got slammed for some reason, our maximum is $10. So, anyways, that one was a much better spread because there was still lots of premium in the puts. All right, let's move on to other things that might be interesting. This one, AERI, has the classic setting up. It didn't today. As you can see, you get the fry pan bottom, the breakout, the J-hook pattern. This one you want to be buying, especially if it comes back up through the open of today. That tells you that J-hook pattern is still in progress. What would your vertical credit call option strategy in view of earnings reports? Oh, how do you say that? Smit-sit? That's a whole longer conversation, which we'll do that on our next option night. Is the staggered spread for the options room. Do you ever close out a bull credit spread before it expires? My spread was up halfway to the target price. Yes, there's times when let's say the price moves very quickly. I'm going to just use this chart as an example. Let's say we bought a credit spread right in here, and then bam, did this, and we're still 3 weeks away from our from expiration. Well, our upside isn't going to be that much. The only thing that's going to affect our upside is getting to expiration. Meaning if we had a $5 spread and let's say we paid $1.50 for it, and then they popped it, now our spread is worth $4, but we've got 3 weeks to expiration. We've got to decide, is it worth having that $4 to make one more buck over the next 3 weeks, which is still a decent percentage return, or are we better off taking profits now and not worrying about holding it for the next 3 weeks and finding something where we got a much better return for our money? So a lot of times, or not to say a lot of times, but if I've got a big move well before expiration date, and the only thing that's going to take my $4 to $5 is time, because anything above whatever price that we did the spread on is going to eventually turn into $5. The difference between the lower price one and the higher price one. Yeah, I'll close out the position and take that money and move on to something else. Let's see. Okay, now let me. Oh, she was talking about a whole different thing. Let me see. Do you ever close out a bull credit? Oh, let's see. A bull credit spread. No, I may have answered that completely wrong if I didn't read the question right. Do you ever close out a bull credit spread before it expires. My spread was up halfway to target. It was the same, yeah. Now a bull credit spread. Let's see. If I'm in a bullish, Lori, the answer is yes. I'm just trying to figure out the example, which I can't right now. Yes, if I've got a good profit in a spread, and there's still enough time or too much time between now and expiration. Yeah, sorry, Tom. Lori, we'll go into that later. Here we go. Yeah, I'm sorry, Tom. That was the whole purpose of setting up the option trading room. Tango. Tango is another one that kind of had a doji sandwich setup after a bullish engulfing signal. What makes it so attractive? If they open a positive, they're breaking this downward trend channel with strong buying. And notice where the buying occurred, right about the same area that we had another big, powerful, there's your belt hold signal. But if it breaks through this downtrending channel, they're heading up to the 200-day moving average. And so this is kind of observe the obvious. What would happen if they started buying here? They'd be telling us that this is not a resistance anymore. After strong buy signals with lots of juice left in the stochastics, this is what we want to be looking for, is where are they starting to break out some of these. And another one that fits in that category, MPAA, did break out through this downtrending channel in the 50 with a T. Notice all the factors we can put into this analysis. Not only did we break this downtrending channel and the 50, we did it with a doji sandwich, and we did it with T-line crunch, and we did it with a belt hold, and stochastics is still heading up. This tells me there's still a lot more to the upside, more than likely back up to test the recent highs. Neil, that's the wrong attitude. You can go broke taking profits. That's why we want to use candlesticks. And I always did that too, was mostly because if I ever got into a winning trade, I was such happier than a pig in doo-doo that I'd take my profits quickly because my thought process was, man, I finally got a winner, but I better close it out before it turns into a low. My whole scenario was that if I got into a winning trade, I took profits real quick. If I got into a losing trade, I'd hold on to it, waiting for it to come back to where I could break even, which is the definition of eating like a bird and pooping like an elephant. And I lost tons of money. Now, if I've got a winning trade, it's because the signals have told me that was a winning trade. I want to stay in it until I see that trade maximize the profitability. That was the whole reason for being in it, was to find a trade that was going to give me a strong return. Now, you may have been referring to taking profits on a spread that hasn't finished out, which that's a different story. Sorry about that. Okay, here we go again. So that one was MPAA breaking out, and then this one was PTX. In a nice steady uptrend, also ready to break out with a little scoop type pattern. So this is why we want to watch to see what type of signals and patterns we have once we hit a resistance level. If it goes through that resistance level, you know the follow through is going to be more upside. Rally. Let's make this bigger. Rally, Morningstar signal, followed by a gap up. That kind of tells me the next target is probably the 50. If it goes through the 50, it's going to fill this gap right up here. So that's got a good 15% upside potential. And BIDA is another example of what clears out the sellers, a belt hold signal. So that told you all the sellers were getting out. Then the bulls just sopped them all up and got rid of all the sellers. Now notice what the trajectory did. The trajectory went from going like this They're going like this because there's no sellers in the way. So the reason I point this out is this is time to be buying, not looking for this type of trajectory, but looking for a much faster trajectory in that uptrend. That was bitter. Let's see. TPLM. Oh. S dot. TPLM. There's that breakout potential right here at this level. If it goes through, tells us we're in wave 3, that magnitude. So this is, again, why you want to see what the signals are, the patterns, and where it's about ready to break out. This is VOXX, big bullish engulfing signal. Failed the 50 the first time, came back, and now going through the second time. If they've gone through the second time, where's the next resistance? Up here at the 200-day moving average. Data, nice J-hook pattern set up, and how did it get started? Doji sandwich. If it opens positive tomorrow, what's it doing? Telling you there's more upside after a doji sandwich, and it's not resisting anymore at the T-line. If it came up and failed the 200 and came down and bounced off the 50, where do you think the next target is? The 200 again. And if it goes through this time, we're probably in wave 3. And EJ, another J-hook pattern, classic, fry pan bottom J-hook, little gap up. Where do you think the force is taking this one to? The 200-day moving average. Oh, Kiwi. Kiwi, notice what it did right all along here. This tells us this is a nice little fry pan bottom. It's telling us it's time to be buying. And AMZG, fry pan bottom, breaking out through the 50, telling us it's time to be buying. And MEIP came up through the 50 the second time, right here at this breakout level. If this opens positive, next target's up here at the 200-day moving average. Okay, that's about all I've got tonight. Do we have any general questions on candlesticks? What do you think about ETFs to reduce volatility, less upside versus less risk? No problem with that. ETFs are kind of give you that, reduces your risk, not so much as volatility, but let's see. Trying to think, there hasn't been any recently. S.CLF. I'm trying to just think of some in the past. Maybe it's way past. But there's a lot of times if you're buying an individual stock. Now, I buy the individual stocks because I want the volatility. The ETFs, obviously, is much less volatile. So the bigger the trading entity, obviously the indexes themselves are the biggest one because of the accumulation of all of them. ETFs are segments or sectors, and then the individual stocks. So it all depends on what your risk-reward factor is. ETFs are much safer to trade, and they're probably much more, much more easy to see what the trend is and when the reversals occur than an individual stock. So, nothing wrong with ETFs. Can you examine a bull credit spread? Greg, not right now, only because I can't think of what ones to do. I've usually got to sit down and my bullish credit spread today was the Amazon trade, which was we were selling the 345s and we were buying the 335s, 10 points below. But when we were selling the 45s, we were putting that money in our pocket, and when we were buying the 35s, we're having to pay that money out. So the net difference between those two trades was $3.15. All right, what that meant was we were selling the puts. We were short the puts, which was bullish. We want things to go up. And we bought this one down here just for the protection. If something slammed it, that we weren't short a put, which means we wanted to go up, and it went this way, and we'd bought those puts, or we had sold those puts to somebody for, I'm going to just pick out a number, $4. And then all of a sudden they drop like this, and we had to buy them back for $50. That's not what we want to do. We want to protect ourselves. So the factor is that when we sold those, remember, you're selling the puts. Somebody that was buying the puts wants that price to go down. Selling the puts, we want it to go up. And as it goes up, that price of that put goes lower, lower, and lower. So on the day of expiration, if it's trading above $3.40 or $345, nobody's going to pay you any money for those puts because it's not worth anything. So that means the money that you put in your pocket here stays in your pocket. That would be a bullish, a bullish put credit spread. Okay. No sound. Oh, no. All right, Jim, let's go ahead and do the double line. And I see there's a belt hold. We'll show an example of a belt hold. And Jim, do the second double line. Let's see. Is this Johnson Controls? This one you can be buying on positive trading, especially with a gap up to the resistance level. HCLP. This one you get ready to buy. There's the J-hook pattern setting up. If they open this positive tomorrow, telling you that the T-line's not acting resistance and that this level is not acting resistance, you've got a nice J-hook patterns set up. GYAX backed off a little bit today, but didn't do anything that would be major, except if you see this at this point, if it trades back below today's low, close it out. That means they're not going this way, they're going this way. You want to be out of the trade. MDRX. Ooh, that's soggy. This one has to open positive and trade positive tomorrow. If it opens lower, close out the position. Micron. There's the doji sandwich that took you back up through the T-line. This is one you can buy again on positive trading and use the T-line as your stop. Alcoa. Stay long until you see a sell signal. At this point, if I was trading it, I wouldn't want to see any trading back below today's low. And AMAT. Another one where all you need to do is stay long as it stays above the T-line. Excuse me. Salesforce. Salesforce, I wouldn't get real excited about this one just yet. It has to do something strong, showing you that it did get up through the T-line. DNDN, another one that needs strength. Maybe I'm making them too little. Nah, still needs some strength. Needs to see a strong buy signal. It did somewhat of a doji sandwich. Now it needs to open positive. If you're buying tomorrow, it needs to open positive. It just better not trade back below the T-line. Pran. Oh, you can see the big fry pan bottom in Pran. You stay with it as long as it stays above the T-line. Now you have a bullish engulfing signal. It means they have to open this positive and trade positive to stay in it. And USB, this one I wouldn't be long or short. That one's just sideways. There's better places to have your money. Yahoo. This one you can stay long, but it needs to break out through this resistance. You've got the trend channel in progress. If you're long, you stay long. Just be very diligent here and here to see whether they can break through those levels. ISR. This one you can be buying on positive trading. There's your fry pan bottom J-hook pattern. And BBBY. This one has to open positive. I mean, first of all, be aware of the lack of magnitude of this stock, and it's been trading sideways. I probably wouldn't really want to be buying this until you see it close above the 50, which is telling you they're breaking out through that resistance level. AKRX. Recently recommended this one. You stay with it as long as you don't see a sell signal. And Pixelworks. Stay long on this one. And you could be buying this one on a positive open tomorrow. That's still a good looking chart. Royal we did. Royal you stay long as this stays above the T line. If this opens positive and starts trading positive, you probably want to be buying this one tomorrow. ERIC, Ericsson. Nothing here yet. Let me make sure, because I am thinking that is red. Still don't want to do anything with this until they can get it up above the T line. Now you do have the gap up, so it tells me there's going to be another day or two before you get enough buying to get it up through the T line. Boeing, you can be buying on positive trading. You did Alcoa, Excel. This one's a nice gap out. This one, look for a 45 degree to come off of here. Somewhat along the same trajectory as this right here. And SPWR. This one has a nice setup. A little profit taking today, but if it comes back up through today's open in tomorrow's trading, that's when you want to be buying. That pretty much tells you the profit taking's over. Northeast Utilities, they said all the utilities got whacked today. This one I would be out of. This is one I would anticipate is eventually going to come back down to test the 200-day moving average. DTB, stay long as it stays above the T-line. Just be aware, though, of the lack of magnitude of this one until they break it out. DYN, stay short. More than likely now you're heading to the 200-day moving average. Brocade, I wouldn't be right now long or short this one. It needed to get back up above the T-line. It had the potential of bouncing off the 50, but as you can see, they're not buying this one yet. And I wouldn't really even be shorting it here because you've got too much resistance right here on the moving averages, or support on the moving averages. PTLA, another one that is setting up nicely, but I wouldn't buy it until it does get back up above the T-line. ENPH. This one you can be buying on strength. Just use the T-line as your stop. And MITK. This one's getting to the breakout point. I wouldn't want to buy it until it gets up to about the 375 range. But you can be buying this one. Notice what they've done. They've started gapping this thing up. That tells you somebody's coming back in with a little bit of force. And Netflix did a doji sandwich type day today on a kind of a J-hook pattern. This one you can be buying on positive trading tomorrow. And Scotty needs to get back up above the T-line. So you've got a doji right here at the T-line. If it opens positive and starts trading positive, you can be buying it. Just use the T-line as your stop after that. And WPRT, that's a nice J-hook pattern that told you the 200-day moving average was not going to act as a resistance anymore. There's still more upside to this one. IMPV needed to get back up through the T line. It's not out of the park yet or out of the question. It just needs to get back up above the T line before you want to start buying aggressively. CSLT, this one looks good. This one you can be buying kind of the scoop pattern, and you're right here at the resistance levels. After a left-right combo, if they open this positive, they should be bringing you back up at least to the $18 range. FEYE also needs to get back up above the T line before you want to do anything with it. Let's see, we did WPRT, right? Yes, J-hook pattern. Facebook's got a nice J-hook pattern. This one you can be buying on positive trading tomorrow because they're going to take it back up to the top of the trend channel. And Halliburton. Ooh, Halliburton. Oops, made it two. Halliburton's done a little morning star type signal. You can be buying this one on positive trading, but it needs to get back up above the T line. SDRL. Did I do that wrong? S.SDRL. I wouldn't be long or short this one. This one's got too much junk here, and it doesn't have any trend to it. SWC. This one has to open positive and trade positive tomorrow to stay in it. Otherwise, if it closes or opens lower and starts trading down, close it out immediately. Well, that was SWC. Guild. Just stay long. ZLTQ. That's got a nice little J-hook setup. Not a J-hook setup, scoop type pattern setup. This one you can be buying. Just use the T-line as your stop. Okay. A few more. Citigroup had good earnings today. Whoops, that's porn. Citigroup. Gapped up. This one should be moving. Wait for the profit taking to be over. You can be buying this one. The only problem is that it doesn't have a very big magnitude of move because it's an institutional trader. You're not going to make a whole lot of money with it. STEM still has to get a close above the T line. It's trying. If I owned it, I'd be out of it. So that means I wouldn't own it. To buy it, I'd rather pay up for it knowing that it got back up above the T line. SUMR. Stay long on this one. Look for a doji sandwich breakout. That's got a good, powerful chart to it. So that CMI. This one I wouldn't be long or short. That's too flat. DDD. DDD also has to get back up above the T line, but as you can see, if they do, now you're going right back up to the 200-day moving average. We did Facebook, Glue, just stay long. Now you start watching for your profit taking because there's your wave 1. Wave 3 is almost that same magnitude. Start watching for your sell signals. Groupon, I wouldn't be long or short this one. They're not taking it anywhere right now. Live, kind of the same scenario. You're just kind of stuck sideways. I'd have my money someplace else. And NFA, S.NFA, that one's not coming up. let's see, INFA, okay. INFA, S dot INFA. This one, you stay short until you see a buy signal and a close above the T line. Right now, you haven't even seen a buy signal. And CBAC, you get ready to buy this one. That's a good-looking chart. Notice that when they brought it back to the T line, profit taking's over, starting to take this one back up. Let's see. Uh-oh. Whoops. BRCD. Brocade, nothing there. Uh-oh, did that wrong. Zaza, you get ready to buy this if it opens positive tomorrow. It tells you the 200-day moving average is not going to act as resistance. Sierra, this one needs a little bit more. You stay long if you're in it. Just make sure your volume is a 70-cent stock. Your volume better be pretty good. Okay, what else we got here? We did glue. A-Run. A-Run needs a little bit more juice. If you're going to buy this, it needs to come back up through today's open. You had a good, strong buy signal, scoop pattern, but just put your buy stop at today's open. If it comes up through there, that tells you the profit taking is over. GDX. If this opens lower tomorrow, you're going to have the potential of a bearish flutter kicker. You probably want to be going short. If new is going to the 200, you could, for what would your rate of return be? 1 point on a $45 stock. 4 points would be 10%. So you're looking at about a 2.5% return. There's probably a lot more better places to have your money. LJPC. This one you get ready to buy on a positive open tomorrow, the Doji Sandwich. And ASMB, that's a big, huge breakout. This one you get ready to buy on positive trading. These are the type, I'm going to make this as small as I can. Oops, whatever it was, it's doing it. So I take it they must have gotten something approved. And ENZY. Make this bigger. This one has got the T-line crunch. This is very simple. If they start trading this above 15 tomorrow, you want to be buying because there's a gap up here to fill at the $20 range. So you got a 33% potential on this one. So I'm going to put a little star next to that one. CRMB. Did they stop trading this? It looks like. Anyways, something's wrong here unless I'm not seeing the rest of the chart. I don't know what to tell you there, JB. RVLT, this one you can be buying on the little cup and handle, getting ready to go up to the 200-day moving average. STXS, this one I wouldn't be long or short. You can't be short because it's below $5. Jenny, I can't get, for some reason, I can't get the Forex trades over here. I still need to, I never think about it until somebody asks about it. GEO, just stay long as it stays above the T line. Nuance, you stay out of it until you see a buy signal and a close above the T line. MMYT, this one you get ready to buy. You're seeing the support on the 50, but it still has to close up above the T line. Oops. NEM. You're seeing a very slow uptrend. I wouldn't be owning this one just because of the lack of magnitude. Why not short Brocade if it falls through the 50? You could, but you're getting close to the oversold area already. I would suspect it. So if it falls through the 50, yes, you can short it, but then you're already going to be in the oversold area. CXMD, wouldn't do anything with this one. You should be out of this one. And CAMT, this one you stay long. As a matter of fact, you can be buying this one on positive trading tomorrow on a breakout, Doji Sandwich breakout of the fry pan bottom. USU is caught in this sideways trend channel. That's the 30-year bond. Right. USU, this one you should be out of. It hasn't supported it. You can always buy it back above the T line. Okay, let's call it a night. Okay. What can we short? I wouldn't be shorting anything in this market right now. There's too many opportunities on the long side. AMD, nice breakout. This one you stay long until you see a sell signal. Okay, let's call it a night. We'll see everybody in the chat rooms tomorrow. We'll see you then.